What would you suggest is the end game? Are we talking largely about the credit markets, interest rate reversals, and an end to the shenanigans that have been played for 30 to 40 years in those credit markets? What is your area of greatest concern, and what would be some practical things that investors can do in these harrowing transitions?
I mean, I think we're all doomed. I think what will happen is that we are in the midst of a kind of a crack-up boom that is not sustainable, that eventually the economy will deteriorate, that there will be more money printing, and then you have inflation and a poor economy, so an extreme form of stagflation. And eventually in that situation, countries go to war, and then the whole derivatives market and everything will collapse. And like your computer, when it crashes, you will have to reboot it. And so for the investor, the question is, how do I navigate through this complete disaster that is going to unfold? And I think if you look at different asset classes, real estate, equities, bonds, cash, precious metals, I suppose that you have to be diversified. I think real estate in the U.S. may go down another 10% or so, or even 15%, but I'm always telling people, if you can buy the piece of land or the house you like, what do you actually care? It goes down another 10%. If everything I bought in my life had only gone down 10, 15%, I'd be very rich, because a lot of things became worthless, especially loans to friends and bonds and so forth. And if I look at the history, say, of Germany, for the last 100 years, they have World War I. They had the hyperinflation and World War II. The bondholders, they got wiped out 3 times. If you own Siemens, and you still own Siemens today, it wasn't a fantastic investment. But at least you still have something. You weren't wiped out. And so I think that in equity, you will be better off because you have an ownership in a company than by being the lender to companies and the lenders, especially to government.
Do you anticipate an entry point into equities that perhaps rivals what we saw in 1932 or perhaps 1949 or more recently 1982 as we launched into a massive bull market? Do you anticipate seeing values even remotely close to that?
Well, as I said, in a money printing environment, it's very difficult to know what is actually cheap and what is expensive. Is the price of wheat high or is it low? Inflation adjusted, it is extremely low. In nominal terms, it's relatively high. I believe that actually in March 2009, when the S&P was at 666, the market was actually much cheaper than it's generally perceived because of the money printing. And I don't anticipate that we will see 666 on the S&P again in nominal terms. In other words, they're going to print so much money that the S&P could be, I don't know, at 2,000, but in real terms, it could be down below the lows of March 6, 2009. In other words, maybe in gold terms, we could one day reach a ratio Dow Jones to gold of 1 to 1 as we were in 1980. In other words, the Dow could be, say, at 10,000 or 12,000 and gold could be at the same level. So that's why I'm advising people to accumulate gold. Now, can gold have a correction? Yes. There has been a little bit too much euphoria about gold and so forth and so on, and we may have a correction. But I don't think we're in a bubble in the price of gold. In fact, I could make a case that gold at this level of $1,400 an ounce is cheaper than in 1999. When I look at the unfunded liability growth of the U.S., at the credit growth of the U.S., and at the household debt growth and so forth and so on, and at the money printing, and at all the wealth creation that happened in China and in Russia and so forth and so on. Just consider when I started to work in the 70s, One said there were two billionaires in the world. One was Rockefeller and the other one Mr. Ludwig. Then in 1980, there were, I think, 6 or 8 billionaires. Now you have thousands of billionaires. It's just that paper money has become of lower value. And in that environment, it's conceivable that actually stocks don't go down a lot in nominal terms, but they go down inflation adjusted. And not inflation adjusted by what the government is publishing, but in inflation adjusted terms, as John Williams points out. He says inflation is running at, say, 8% per annum. I have it slightly lower, depending also on the household, whether you have children or no children, where you live. But I would say between 5 and 10% in America is probably a realistic figure, and between 8 and 12% in countries like India, China, Vietnam is also realistic.
Well, thank you for joining us today.